Hi, welcome. So I understand that this is the first year at the WIRE conference that we're talking about affordable housing, which is so exciting, I think, for all of us and so timely. So by a show of hands, who thinks that there's a housing crisis in the United States of America? Okay. How about in New York City? Yeah. So, particularly in New York City, the mayor and the governor have talked a lot about housing crisis that we're all facing, and I think the migrant crisis is obviously going to add to that. So affordable housing is something that is so important to the world and to real estate, and it's such an interesting aspect of real estate. And for people that are thinking about what you want to do in real estate, this is one area that you can really dig in on and touch and feel and make a difference. And all these ladies have made a difference in their lives, in their firms. So I'm so excited to be here with you guys. I think one of the things about affordable housing that we talked about when we got together is that what does it mean, right? When you hear the word affordable housing, what does that mean to you? And it means to people differently. And so we thought we would start kind of very simply, but not simply, because it's complex, right? And ask each of the panelists, what does affordable housing mean to you? And then maybe to your company. Mm-hmm. Carolee?
Sure. So I guess the very simplest way to describe what affordable housing means to us is that the units are income restricted, yeah, and regulated. They're under some form of regulatory agreement between a municipality, state, and the developer to make sure that the units that are affordable stay affordable.
Mm-hmm. Okay, got it.
And for those who are eligible, based on the technical definition, affordable housing to me means a place where families can thrive. They're in a safe and clean environment where seniors can age in place with dignity.
I would agree with both of those definitions. I guess as context in terms of, so I work for Trinity Church, which is a historic church downtown, and I work in the investment team, which is a group that oversees the endowment for Trinity. And so we are also a philanthropic organization and church, but we also very much have a fiduciary duty to make sure we're growing the endowment in perpetuity so the church can fund all of these great things that we do. So we actually invest in all different types of real estate, and even within affordable housing, while I think we certainly have a preference for what was described, we'll look at all sorts of residential, and we'll look at affordable housing that might actually be described as more naturally occurring. We will look at a whole variety of different types of real estate. For these purposes, I think we're going to talk a lot more about what was just described, but we have some flexibility in the way we think about real estate and affordable housing.
Hi, everyone. Let's just talk about numbers for a second, because a lot of times when you hear about affordable housing, you hear 80% of AMI. So what does that even mean? So AMI, area median income, published by HUD annually, normally April or May. So let's say you're in Austin. A family of 3 that makes 80% of AMI is around $79,000. So if you're a policeman and a public school teacher, you are above 80% of AMI. And you can't find what's traditionally considered affordable housing. So what a lot of us do on this stage is we figure out mixed income housing where it's not just the traditional low income definition, where a lot of folks talk about 80% of AMI. If you're dealing in the tax credit space, that's 60% of AMI, so that family of 3 would make $60,000. We also talk about higher AMI limits, so a firefighter with a public school teacher or the nurse who lives with a bus driver will be able to stay in that unit and have regulated rent increases and not be priced out of their homes.
Yeah, so what Amanda's talking about too, this is another term that you may hear in the real estate world. Some people call that workforce housing, right? So now, like when you're building housing for firefighters and teachers, you're building housing for workforce housing. So that's another term that does, it's affordable housing, but it does overlap. MSquared, you guys do a lot of mixed income. So talking about what Amanda just touched on, why is that a space that you guys have really moved into, and Why has that been interesting to you?
Sure. So we are a social impact real estate company. We focus on building and investing in mixed income housing, housing that's affordable, sustainable, diverse. Mixed income is important to us because we think that economic diversity in our projects is good for residents and good for neighborhoods. That's point one. And I guess point two is, we like to use the strength of the market to help cross-subsidize affordable housing, right? So you'll probably hear today that affordable housing resources are limited, right? We are in an affordable housing crisis. We need to build more affordable housing. The government only has so much money. So what we do is figure out a way to leverage private sector investment to create more affordable housing. And that's why it's important to us.
Yeah. And so, okay, so good segue to private sector. So who are those entities or individuals that are interested in investing in affordable housing? And what do those structures look like? I think a bunch of you probably can talk to this and on your deals. So I give it to anybody and then we can work through it. You start,
Oh,
Carolee.
sorry.
Yep.
Well, we've raised 3 funds. We have about $250 million under management. We've raised that from individuals, from institutions. Actually, Trinity anchors one of our funds. It's called the NYC Affordable Fund, where we're exclusively focused on making affordable housing or more affordable housing in the 5 boroughs. So they've been a great and innovative partner in helping us think how we can catalyze more affordable housing in the city. Those are some examples of investors in our funds.
Yep.
I can
Cynthia?
chime in here,
Yeah.
yeah. So I guess within the investor landscape, there are a lot of different types of players, which I think it makes it to be a very interesting space. So talking, I guess, more on kind of Trinity. So Trinity probably sits within the endowment and foundation world. That's typically who we think of as our peers. And that is a group that is active in affordable housing. They're groups like us that look and feel more like foundations, where there might be a mission alignment component that is definitely driving part of the reason we invest in affordable housing. And so for us as a church, one of our mission areas is housing and homelessness, which lends itself very easily to affordable housing investments. I'd put another group like Ford Foundation. They also have a mission around housing and homelessness, which is why they also do a lot of affordable housing investments. Endowments do typically have more of a mission around kind of education, and so it might not necessarily be as mission oriented, but will still also invest in affordable housing. And then I think there's a range, and I think you see that within the folks who are on this panel too, where there are a lot of private credit funds and private equity funds where there might be that mission alignment. So not to say that everybody doesn't have this element to it, but they very much also need to be thinking about their limited partners and the folks who are invested in them and making sure they have a return of capital and kind of generating capital and profits for those investors as well. And then there's others who might be motivated more for tax incentives. And I'm sure we'll later talk about the way that some of these deals are capitalized, but there may even be deals that there's not a lot of equity required, and that equity might come in the form of tax credits. And for that, you get investors who are more interested for those tax credits. You have the banks. The banks tend to be very large investors in this space, and that might be more motivated for regulation, like the Community Reinvestment Act, which is, there's large groups within a lot of these banks that focus on investing in affordable housing. So all this to say, there are a lot of different types of investors, high net worths, OCIOs. A lot of folks are looking at this space, which is great. And then, of course, I think it's worth mentioning, that's just on the investment side. And what I think is really interesting about affordable housing is you have so many other types of stakeholders, whether that's politicians, regulators, tenants, community groups. So there's a lot of different factors at play as you think about investing in affordable housing.
Yeah, there's probably more factors at play, right, than just a normal office building, right? So Amanda, who are some of those players? I guess break it down for the students in the group, like a typical affordable housing deal. There are so many players, and so I think the takeaway would be there's so many opportunities, right? This is an area that you can get into and find your niche because there's so many places that you can play if you're interested in affordable housing. So yeah, what are who are the players? Name them out.
Okay, how long do we have? Like 2 years. So there's the purely affordable side. Like, how did the Relateds of the world make their money? L&M started in 1984, similar way to Related. We built our balance sheet doing 4%. Whenever someone says 4%, new construction, tax credit deals, you really are getting tax-exempt bonds that are private placement bonds and tax credit equity. That's the traditional affordable housing model. You are a developer, you have your own construction company, and you help build the affordable housing. There is no traditional private equity in that model. So that was kind of what everyone thought was like the only way to do affordable housing for a long time. Then there's the private equity side of the equation. And so I'll just give you an example of a deal we closed yesterday. So it was 370 units. It's in DFW, and it's in an area of DFW that has never seen mixed income housing. So it was built by a very reputable merchant builder. They were going to sell it to a core fund, a core plus fund, and then we were in the mix. What did we do? We partnered with the housing authority on the ground within that area of DFW. We bought this deal, which was about $95 million. And the seller did not know, or I mean, we told them, but there was no contingency in the contract to close this deal with a public-private partnership and make the deal affordable. That is kind of like the new area of dealing in affordable housing. You're dealing with sellers who sell to anybody. Think of your traditional landlord. But if you want to get into the mix and do something that has some social good and create a mixed income property from 100% market rate property, you are partnering with a local municipality on the ground there to put in place a regulatory regime. So in that process, to Laurie's question, you were dealing with the seller, your traditional lender, and that deal we dealt with Freddie through Berkadia. We also are dealing with, if you have a JV partner, we didn't have a JV partner, but if you were dealing with an operator, you're negotiating with them, and your JV, you're also dealing with the housing authority and negotiating all of your regulatory agreement documents. But the seller can't be bothered with what's going on with the housing authority. So you're keeping all these conversations separate, and then you're closing as if you're any sort of traditional acquisition. So it can be stressful because you can't have contingencies in these contracts because these sellers, they want to get out. Normally merchant builders, they build to sell, and it's rinse, repeat. So there can be a lot of actors, but at the same time, normally the other parties don't want to be bothered with what's going on for your strategy. So that's where kind of the stress can kick in.
That's awesome.
Yeah.
Got to be a quarterback. All right, Leleah, so one of these projects, Amanda does everything that she just said. She closes her deal yesterday. And affordable housing is all about the residents, right? And you touched about it when you talked about what it means to you. And so how do you get a project built? How do you then, beyond monetary success, which I want to come back to and talk about, because I think there's a misconception there. But how do you measure success with the residents?
That's a great question.
Yeah.
My role is resident-centric. So Related Affordable is within Related Companies, large real estate developer. We do new construction. You think of Hudson Yards, your higher end asset classes. But my division, unlike L&M, we don't build new construction in our affordable team. We acquire portfolios from other developers that are willing to sell with an offload. And then our team on the deal side, they're responsible for the financial transactions in order to maintain and preserve affordability versus risking that property converting into market rate. As we're in an affordable housing crisis, that role is more crucial than ever. So with my role, I start from the very beginning with the team. So when our senior leaders are trying to determine, does this portfolio make sense for what we have already? Do we have a presence in the market? Do we have relationships with elected officials? Do we have good relations with the residents existing in there? I'm going to the properties. I'm physically dealing with nonprofit partners to determine what the unmet needs are. So when we talked about market rate amenities earlier, affordable housing residents, low income residents, the amenities are completely different. You need to meet people where they are. And so they don't need a work from home space if they don't have the internet access and they don't have a device to work from. Mm-hmm. The priorities are different, and so I'm coming in from that perspective and lens when we're trying to discern, does this deal financially make sense, does it pencil, but then also, are we the best stewards for the residents in those buildings?
That's complex.
Yes.
Yes, that's complex. So one of the other comments that I hear a lot, I represent a lot of developers, but I represent investors also, is kind of two comments recently. One was, I really want to get into an investor. I really want to get into affordable housing because I believe it's recession-proof, okay? But I don't think I can make enough money. I don't think the returns are high enough. So, how does somebody want to take those two comments that I hear from investor clients? Like, okay, is affordable housing recession-proof? And can you make a good enough return as an investor?
Recession-proof, well, I mean, we're in a crisis, and people need to live somewhere. People need to live in a place where they can afford. So I guess if you have an apartment that's affordable, you'll probably be able to find someone to rent it, since there are so few of them out there. So I guess that kind of answers the recession-proof. On the return metric side, I mean, that's really, what is enough for you, right? I think what we all have to be honest about is that affordability costs something. Yeah. You can't expect to get, a 20% return on a project if it has a good amount of affordability in it. You have income restricted units that are only going to grow by a certain percentage, that's, regulated every year. You can't juice that. You can, potentially financially engineer it because you're using, different types of debt products or different, other types of subsidy, tax abatements to make it operate a little bit more efficiently or more efficiently, depending on who was operating it previously. But if you want to make, a 25% return on your investment, you're probably not going to be in the affordable housing world, I'm guessing.
I would add to that comment, though, that might be true from whoever the investor was talking to you on an absolute basis. It might not look as good as other real estate opportunities or other sort of asset classes, but I would argue that on a risk-adjusted basis, affordable housing can be very competitive. And I think that there are underlying characteristics to affordable housing. I mean, not just some of the things that Carolee mentioned on, having financing that tends to be low cost and very stable, like pretty low volatility cash flows because of what's going on the demand side and the number of people who need housing. That's not even mentioning the fact that for truly, the affordable housing we're talking about, if it's regulated, without going into too much technicality, but let's say you have a Section 8 project that you're invested in, your counterparty and the people who are paying rent is actually the federal government, it's HUD. And so if I think about, my income stream coming from the federal government on a risk-adjusted basis, I might take that all day long versus an opportunistic development for commercial. So I would say even just looking at our portfolio, our affordable housing portfolio did very well, and it was the occupancy, the rent collection through COVID was very strong. I can't say that about some of the other elements of our real estate portfolio. So I do challenge people who say, you can't make money in affordable housing. I think on a risk-adjusted basis, it's very attractive.
Yeah, and just one more point on that. Take a Section 8 voucher holder, for example. They pay 30% of their income towards rent. They make $36,000 a year. They rent a $3,000 one bedroom in some nice area in Manhattan. $2,000 is paid by the federal government, as Cynthia said. That tenant loses their job. What happens? Well, you get potentially, if that submarket has seen massive rent growth, maybe you can actually get $3,000 or $3,500 from the federal government, and that tenant's portion of their rent will actually go down to their new income level because they're only paying 30% of their income towards rent. So if you take a market rate operator that only depends on the tenant's income to pay their rent, and then you take a Section 8 voucher holder, and that Section 8 voucher holder also has some cushion from the federal government. They're still paying as much as they can towards rent. They're over 30% of your income towards rent. You're considered rent burdened. But you're safer from an investor standpoint with the Section 8 voucher holder in tough times versus the market rate operator who has to rely solely on the income of the tenant.
Right, I think it really depends on who the investor is. We do a lot of new development.
Yeah.
That's primarily what we're focused on. So, people's expectations about returns around new development, because there is so much risk, because it takes so long for the product to come online. When you're talking about a mixed income product, You know, they're always, you know, depending on who they are, what their, you know, their investment box is, you know, sometimes that they're thinking about, oh, but I saw you know, a higher return on this, you know, luxury product. How come we can't get those kind of returns in a mixed income product? So there's a little bit of education, but also to Cynthia's point, there is risk-adjusted return. You don't have that market risk.
Yeah. Cynthia, where are the opportunities right now, do you think, in affordable housing? Do you see any pockets?
It's interesting because the way that we approach affordable housing, and really a lot of our investments is, and I would say affordable housing for most of this portfolio sits within our impact investing initiative, which is a new portfolio we launched a couple of years ago. We do have affordable housing exposure that's outside of it, so not to say that it always has to fit within that, but the reason I say that is the way that we really think about that portfolio is because we have very flexible long-term patient capital, we're not a fund, we don't have a certain end of kind of life or term limits to it. We want to be doing things where other people might not necessarily want to be doing or can't be doing. So while I think there are a lot of interesting investment opportunities, I'd say the lens that which I'd answer this question is more what are other people not able to do where there is a need, and because that is what drives us as an institution. And one of the areas that continues to come up for us are working with, in particular, nonprofit sponsors or BIPOC developers who can't get funding for particular parts of a project, and in particular that has been on land acquisition and pre-development loans. So those are two areas, or I guess kind of one larger area, that we are continuously approached by sponsors where they might not be as well capitalized as an L&M, and they need, you know, somebody to help kind of fill in their equity check or help them fund a project, and that is something that, you know, we're spending a lot of time looking at as an interesting opportunity.
Okay. Any other opportunities you guys are seeing? Anybody else? No?
It's just a more relevant conversation across the country now. So I would say 10 years ago, you were thinking about the coasts, and now we're thinking about the entire US. So just geography-wise, it's expanded for us.
Right.
Yeah,
'cause
and
you
resources.
You mentioned Texas,
Yeah.
right? So location does matter, I assume, right? Like, so what are the issues with moving to a new location, right? So what are some of the concerns there? Because it is so connected, right, to the government and knowing people within those communities. I mean, right? Would Related look at something outside of New York? You know, what is your view on location? And I'd love to hear from everybody else, because I think a lot of our affordable housing clients have moved from New York. Doesn't mean they've ignored New York. I just think the focus is clear for the last couple of years that the lens is wider. So,
Absolutely.
yeah.
So I know within our business division, the pandemic provided an opportunity to go into tertiary markets. So right now, Related would primarily look at the coast, LA, San Fran, New York, but now we have a significant presence in the state of Florida, especially in Texas, as you know, people on the West Coast are moving away from California, and also just penciling the deals and how certain states are just more receptive to having and maintaining affordability within their towns versus, you know, some other markets that are not or might not have enough leverage and financing to allow that to happen.
Okay.
And also, I would say certain states and certain municipalities are more active and supportive of affordable housing. So government has a toolbox that they can use to help build affordable housing, right? They have capital, they have land, they have their regulatory authorities so they can grant tax abatements, there's zoning. They can use their toolkit to help make affordable housing happen. In New York State and New York City, we have a very sophisticated affordable housing development world. But what we don't have is a lot of resources, right? We're resource constrained. So there are a lot of projects that can be built, but they're waiting because they're waiting in line for whatever resources are needed to execute that project. In other states, the there are more resources. They don't have the same resource constraints that we have here. So I think we've all, gone and looked at places like Florida, where just recently, actually, they passed a new tax program where before you couldn't get a tax abatement in Florida for affordable housing unless you were a not-for-profit. That legislation was recently passed, which really opens up the door, I think, for a lot more affordable housing that wasn't able to happen because the property taxes were such a drag on the deal.
Same thing, Amanda?
Yeah,
Same vision?
I mean, it all sounds great, obviously, like from an investor standpoint, who doesn't want a tax abatement, recession-proof, that all sounds great. And a lot of us, are closing deals still, but there's the other side of the coin where you're dealing with all these nuances that are actually making the conversation more relevant and then a bit more political. And I'm not talking about politics, but I'm just saying that I'll give you an example of how it got political within Texas, because a few of us mentioned Texas. So there was this tax abatement that we did, and if you closed on, or you lined up your deal in a certain time, you got grandfathered into this tax abatement structure, but it just changed dramatically this year within the state legislature. It was called the 303 PFC exemption. A lot of people used it. Everyone and their mother was flying down to Texas, doing it in Houston and Dallas and Austin. It was like, people loved it. And for ground up new construction and acquisition, converting those market rate buildings. And then all of a sudden, the local elected started realizing, oh my gosh, my tax base has dramatically decreased. What's going on? Are these regulatory structures actually creating affordability, or is someone just taking advantage of the program? And there were some bad actors in this space. Not everyone's perfect, and there were some things that needed to be changed. But unfortunately, as a result, the legislation actually flipped the whole abatement on its head, and now it's virtually impossible to get a deal done quickly in Texas using that abatement program. There are other ways you can also do a lot of ground up new construction, but for acquisitions at least, it made it very, very difficult for a certain part of the program. So I would just say, it's a big conversation out there, but there's also the other side of the coin where things, you have to be very much on your game and understand where the law sits, when you're looking at these programs, because it's very nuanced and you don't want to be caught by surprise ever.
So for the students in the room, how do we get students more engaged and interested in affordable housing? Where are those entry points? As you were sitting there talking about that, I thought, oh my gosh, if there's someone in the room who's so good at advocacy and government relations, this is, and they love real estate, right? What a great job this is. What are the kind of tools that you think students could have or should be focusing on if they're interested in getting into affordable housing? And then also I'm curious, did you guys all have that on your resumes and your training? Did you know you were going to end up in affordable housing, or you wanted real estate and then it kind of morphed into ending up in an affordable housing practice? So I want to hear from each one of you on this kind of two-part interesting question. Who wants to go? Who wants to go?
Right to left?
Anyone. Go ahead, Carolee. You're sitting right here.
Okay. My career actually is really focused in government. I was in government for almost 2 decades, federal government, and working in New York City. New York City worked in the Bloomberg administration and the de Blasio administration, senior levels of economic development, really focused on building mixed income and mixed use mega projects in all 5 boroughs of New York City. When I started my career, I didn't think, I'm going to just only do affordable housing. Okay. I was interested in cities, city building, what the built environment looks like, what it feels like, who's living in our cities, who has opportunity in our cities. And the one thing we all have in common is that we all need shelter. We all need an affordable place to live, and some place where we're not spending almost 100% of our income on rent. And in places like New York City, where things have become less affordable over time, we're really losing a lot of what makes, or we will lose a lot of what makes people or New York City interesting if we're not serving, if we're not building for a whole spectrum of people, right? We can't just have, very low-income people who are living in affordable housing and very rich people who can afford to live in luxury housing. We need a whole spectrum. And so, in the work of economic development, in the work of housing and working in government, we're exposed to those issues in real time and what the policy issues are and the complexity and the nuance. And there isn't an easy answer to any of it, because if there was, it would have been done already. And so it was very interesting. And I guess, to answer the second part, if you are interested in affordable housing, if you are interested in policy, if you're interested in city building, I really encourage you to look at opportunities that are available inside government. You learn a lot very quickly. You're exposed to a lot of people. I sat in rooms very early in my career with some of the titans of New York City real estate that those rooms I never would have been able to sit in, if I was working in XYZ company. So there's a lot of learning, there's a lot of exposure, and it's very interesting work. Yeah. So go serve your city, go serve your state.
So I also worked in government prior to my current role, but I worked in criminal justice, law enforcement. For the students that are not from New York City proper, every borough elects their own district attorney, and so I worked under administrations in Brooklyn and in Queens, and I was responsible for securing grant funding to have innovative criminal justice programming that the city and state could not finance. And again, the exposure to your point, the rooms I would sit in, I sat, on the executive floor in Queens, and it was just really, really great to, it piqued my curiosity. So that's one of the nuggets I will share if you're interested in affordable housing or just whatever career path you decide to go down. Just always maintain a level of curiosity, always ask questions, try to be a problem solver and have the solutions if your boss is struggling with something. And what was the other part of the question? Like advice to students and sorry.
No idea. No, yeah, exactly. What was your career path and what advice would you have to them? So I think you hit them both.
Yes, so there we go.
Yep.
In terms of my career path, I had a fairly traditional kind of finance, capital markets, and investing background before joining Trinity. So I certainly didn't think I would end up spending as much time on affordable housing I do, which has been a great benefit of working at a place like Trinity Church. I would say I was attracted to Trinity Church because it had the social and kind of mission investing focus as an institution compared to other types of investment groups that we kind of talked about earlier in this panel. But I would say, we don't only focus on affordable housing. We invest in all sorts of asset classes. We invest in all sorts of real estate. And because of that, I think we also understand our limitations. And so I have a lot of respect for the ladies on this panel and the firms that they work with, because they're all experts in affordable housing. And the way that we structure most of our deals are through joint ventures and through transactions where we will be working with operators who have the on-the-ground experience and really have all of the relationships, whether it's with government or some of the other stakeholders. So there are other ways to be involved in affordable housing without that being the only type of investment you are looking at. Mm-hmm. In terms of, I think, ways to educate, I think real estate generally is very much a people-driven business. So any networking event, whether it's through school or any other associations you may be a part of, I would highly encourage you to be a part of that. And then I think because there are so many different types of institutions that work in affordable housing, there's a lot of great research out there too. So even if you just go to, the GSE websites or even the New York Fed, they have all of these surveys and reports on the state of affordable housing, and those are great resources, I think, to just learn about the industry as well.
Yeah, I still Google stuff all the time. Like, what is this? So my career path was not traditional. I mean, it was traditional in the sense that after school I went to a bank because in my mind I didn't want to go to business school, so the bank was my MBA. That was like how I was thinking about it. I was just paid for my homework. So then I was like, all right, I want to do something more entrepreneurial. And I think the great thing about this industry is you can actually be an entrepreneur in an institution, which is very it's really wonderful when you need a balance sheet to actually go do something. You know, it sounds great to be in a startup, but then you realize you have nothing in your bank account to go do the things that you need to get working capital to start your business. So affordable housing, even though the Section 8 program was created decades ago, the tax credit program also, it's still really, it's like an ocean. It's like changing all the time. People are innovating, they're doing interesting things, and it's a very social field. Like, Laurie's my lawyer. Like, this is amazing. Like, I get to hang out with her and we do work together.
So much fun.
It is so much fun. And like, I have to say, it's a place where I think my own mother was like, what are you doing? Like, she didn't even understand why I was going into affordable. She didn't even know what L&M was. I mean, she's not in the industry, but you know, after a while, it really became part of the vernacular of living in New York. And I have to say, I'm a born-bred New Yorker. I'm a masochist that way. I will never leave this city. I love it. But I also love cities around this country. It's a really cool way to see the country. I go to Austin all the time, Dallas all the time, Atlanta all the time. Yesterday I was in North Carolina. I mean, it's a really fascinating way. Why? Because you immediately plunge into what the problems are within the city. If you guys want to live anywhere, but you also want a $5 cappuccino, guess what? There's a problem, because normally that place does not have housing for that barista, just like on average in the States. So I think it's a really cool way to be involved wherever you live, but it also is social, it's entrepreneurial. So I would, honestly, after school, I would go work at an institution, like a big institution, get your Excel skills going, and like your communication skills like up and running. Like all the best people on our team, somebody's here today who was at, you know, a big institution and then came with us, like they all have the foundation, and if they work hard and they have that foundation from the big institution, they can plunge right into the entrepreneurial environment, because it's like what they said, you really are in the room very quickly and making decisions very quickly by yourself.
Yeah, Amanda neglected to say that she was a physics major at MIT, and now she's a real estate developer. So I don't know what happened there. I'm sure her parents were not happy, but whatever.
Yeah.
This is, I don't know, that's how you did that, but you did it, you're amazing. So I think the other thing that's, I mean, we, you know, a little bit, I do a lot of office work, right? So office is like very painful right now, and we're giving back a lot of properties, and we're doing a lot of restructuring, and you know, what is the deal flow going to look like with office over the next couple of years? It's, you know, it's going to continue to be very painful. So what do your pipelines look like? Do you think, you know, are pipelines exciting, or are you continuing to add to it, or do you have projects in the hopper that are just going to keep you busy for the next few years? Like, another consideration, right, as you think about what area you want to go into, sort of stability of workflow, I think is a really important thing to think about. So what's going on, Carolee, the next few years? A lot, right?
A lot. Yeah, huge pipeline, because there's huge need.
Yeah.
You know, again, we focus, we're unlike a lot of other funds, we focus on new development. And new development for us, it's important because we have a real supply-demand problem in affordable, in housing in general. The statistic I was looking at, I think for New York, we're underhoused by 800,000 units, and that's affordable in market, right? So we need to build 800,000 units in the state of New York to keep up with the demand. So we are, you know, always looking for new development opportunities to add to the housing stock. You know, we have tons of units, or I would say 3,500 units in our development pipeline, and then another at least 2,000 in our investment pipeline right now. That's just the next couple years.
Wow.
So we're, you know, we're busy, and you know, trying to help chip away at our
Great.
supply and demand problem.
It's doing a great job.
Mm-hmm.
Leleah?
In our business division, we're also very busy. So Related Affordable has over 300 properties across the country and counting. We have a big acquisition deal that's pending. So with that, you can add another 30, 40. And our team has grown exponentially while other businesses and sectors have had to lay off people. Mm-hmm. Our team has been hiring exponentially. Our headcount has grown. I started in 2019 at Related. There were maybe 20 of us. We're close to 40 people just in the New York office. That's not including our major markets in Chicago and California. So we have grown and continue to grow. There are lots of opportunities, and as I mentioned, with other markets being more receptive to maintaining affordability, the sky's the limit.
Cynthia?
Yeah, I mean, for us, this is definitely one of our kind of most exciting areas, biggest growth areas in terms of where we're putting dollars and investments. You know, we own commercial, we have a very different conversation around that. And frankly, I guess as an endowment, and I think a lot of our peers are like this too, we're laser focused on liquidity right now and our own spending needs as an institution. But even with that backdrop, there's so much excitement internally, our board, on affordable housing, so it'll continue to be a big focus area for us. I mean, I just had IC yesterday and got approval for another type of potential partnership with a CDFI, which is another type of player in this space. So I think there's a lot of opportunity here, and it's something that we'll continue to be investing in a lot.
Our pipeline is strong. I don't know if you'll meet a developer, whoever says their pipeline isn't strong, but I would say ours is strong too. The truth is that it's like the work isn't ending because the problem exists so much. And originally, we were seen more as the New York people. We've been in New York, it's our backyard for a long time, but now we proved over the past couple of years we're just more the public-private partnership type company. So we are in a lot of places a lot of the time, but you won't see us in all 50 states because we just don't have the hours in the day to do it. But I think that, you know, if you take one place, you know, take a big MSA, for example, like Dallas, that we were talking about before, has 1 million rental units. That's a lot of deals you can do in Dallas on the acquisition side. And then you do the new development side, you know, you have a lot of land. So it's pretty hard if you understand the space for you not to get excited about the future, because if you understand how the tools work, there's a lot of work to do, and a lot of people want to partner.
Do you think that once you enter a market like Dallas, you want to, because of all the work and energy that goes into learning the players and the people, it's just easier to kind of rinse and repeat once you enter a market? Is that fair to say?
Yeah. I mean, Carolee,
Yeah.
you guys are in Dallas.
We're in Dallas.
Yeah.
We're in Dallas as well. We have
Yeah.
a project under construction there. Yeah, I mean, it's always good to use the knowledge that you've gained in a
Totally.
previous deal.
Yeah.
And a lot of what we do, what you have to learn is very focused on that city, that municipality. So you don't want to waste that time and effort.
Yeah.
I don't know if there's any sort of rinse and repeat deals, because they all seem to be their own special unicorns. But you definitely can take that experience and apply it.
Yeah. And there's work to do in New York. There's a ton of work to do in New York.
Yeah.
We don't mean to just talk about other places.
Right.
And I can even mention with some of our properties in Cincinnati or in smaller towns in South Carolina, because of the work and how labor intensive it is to close a deal, once you have a proven track record in a smaller market, it means that much more, because your larger players sometimes won't go into a smaller market. And now we constantly get referrals in those markets now because they're so pleased with the work after we've completed a rehab and seeing the residents, you know, having something that might have been deplorable to now where it's a livable, high standard. So it's all just about seizing an opportunity and maintaining those relationships, because the referrals will come.
What do you guys think is the one, like if you could pick one thing, probably impossible, but if there was one thing that could happen to increase affordable housing deals or to help solve this crisis, like what the one thing that stands out? I have an idea, but go ahead, Amanda.
I don't really know who's in the room, but I would say the red tape is a big problem within
Yeah.
public-private partnerships. When you have multiple committees and groups, I'm not saying oversight isn't needed. You definitely need oversight, but if it could be more efficient from the layers that you have to go through to do public-private partnerships within the public sector, I think that would make things go a little smoother. And you know, New York needs more staff. We need more staff at HPD. So, and they've been asked to cut staff and their budgets, and it would be nice to have more staff to talk to.
Yeah, and I would add to the budget point and more money for those groups, because a lot of these deals
Yes.
don't work unless there's significant subsidy that's provided. And even if we're looking at a direct deal, you know, we're always looking to see what kind of commitment and what the certainty is around what those subsidies look like, whether in the near term or as, you know, take out financing. And if we don't have certainty around that, we won't participate. And so there's certainly a trickle effect through all sorts of different institutions.
I would say NIMBYism. If everyone all agrees that affordable housing is a problem and we're in the crisis, and if everyone agrees that there are a lack of resources, people have to live somewhere. And it can't just be, that's not my problem, not in my backyard. We have to collectively figure out, who do we want to be as a society, and what do we essentially want our floor to be to determine what success looks like in individuals thriving.
And I would say we can't take our foot off the gas. I mean, right now we're in a very difficult lending environment. I'm sure you'll hear that all day. But if we stop building, we're going to have an even bigger problem on our hands in a couple years, right? We have to keep chipping away at this problem. We have to keep bringing more supply on. We have to just keep going. So we're very focused on that. We're very focused on making our deals happen despite the complexity of the market right now, doing what we need to do to make sure that we're getting shovels in the ground and getting people into new housing.
What are like the top 3 challenges that you guys are facing right now on the affordable side? I feel like is it still supply issue? Is it still rising land prices? What are some of the challenges that you guys are, the regulatory issues that Amanda mentioned? Are there any other challenges that you guys are seeing?
I mean, construction costs, right? That's another thing. Land costs are, I don't know if anybody thinks that they've come down. I don't know. I haven't seen a drastic drop in land prices. I haven't seen a drastic drop in construction prices. Seen some leveling in market rate rents, which, if you put those things together, plus the cost of debt increasing, if you put all of that together, it doesn't make a deal easier to do.
Yeah.
So I'd just say, again, we're in a really hard environment to make new construction work.
I would say rising insurance.
Oh, that too. God, yeah.
It's grown, I would say maybe 30, 40, maybe 50% with certain deals. That's what I hear my colleagues complaining about. And we already talked about the red tape and bureaucracy, but insurance is a whole nother beast to take account. And if you keep having natural disasters that are once in a 1,000-year floods, but they're happening every year, or fires, their insurance costs, claims go up. And that presents a barrier for financing a deal.
Or they leave a state entirely.
Or they leave a state, yes.
Yeah. Cynthia, are you seeing anything?
Yeah, I mean, I would reiterate some of these points. I mean, unfortunately, affordable housing isn't immune to a lot of the things that also make real estate development challenging right now. And so I would certainly say on the cost side of things, I mean, every cost for the most part has gone up.
Yeah.
Yeah, I mean, mine is more real estate related. It's just hard to hire people. There is some, on the ground, your payroll at properties, maintenance techs, leasing staff. There's a lot of supply coming online in some great cities, but as a result, a lot of these people are also leaving and that worked at your property. And the less turnover at your property, if you have good staff, you want to keep them, the better. And so I would say just the real estate problem that a lot of companies are having, affordable, non-affordable, is staffing.
Okay, so let's end on a higher note. The one thing I love about this sub-practice in real estate is, I don't know if you guys feel this or not, but if it feels like a smaller community within the larger New York real estate community. The New York real estate community at some point in your life becomes small. Like, I mean, looking around the room, I'm seeing a lot of people that I know. You do end up meeting people, but affordable is, it's even, I feel like everybody knows each other in the affordable space, and it's collaborative, right? I'm sure that you've called Amanda and said, what have you done here? And someone's called Cynthia or Leleah. Like there is this sense of, there is some competition, right, sometimes for deals, but there is this sense of a collaborative nature. So I wanted the students to know that. Like, I think it is an area in real estate that, yeah, you still have to be super aggressive and make sure you're going to get a deal and negotiate tough and things like that. But generally, it is a collaborative environment. So I think that's one super cool benefit of affordable housing. So I want to end on a positive note. Like, what are some, I'm trying to hire people here, guys, for you. Like, what are some of the other positive benefits other than, what are some of the positive benefits to doing this practice? Yeah.
I mean, for me, it's the final product, right?
Yes.
Being able to go and see a project that you've worked on that has great benefit for the people that live there, but also great benefit for the people in the neighborhood or the city. It's not just something for the, the residents that live in the building. It's a real physical manifestation of what is important to you, to, your values. And so it's nice to see that tangible evidence.
That's awesome. Really nice. Leleah?
I love the challenge of solving complex problems. And prior to working in government, I've also worked in media. And I just love being around really intelligent individuals that all have a shared mission, and we're aligned about how can we be innovative in solving these societal complex problems that no one else has been able to solve, or how can we essentially make a better toolbox? How do we improve the process?
Such a cool point. Cynthia?
Yeah, I mean, I think part of the reason it's such a collaborative group, which I agree with that assessment, is ultimately I think all of these groups are trying to solve a very acute problem and create housing, which I think is a wonderful goal for all of these groups to be trying to work towards. And you can really change people's lives, and you can change communities, and you can really impact neighborhoods in the way that people live.
Yeah, you're generally interfacing with pretty thoughtful people. That includes the team that gets attracted to companies like ours. We have very low turnover on our teams because I would say that generally those are pretty good people. They happen to be good at math, and they know how to, do a nice financial model, but they also want something more than that. So they care more about just rent growth, which is kind of like a singular variable that, a lot of real estate historically just cared about. So it normally attracts more thoughtful folks, which makes it easier to be happy in your job. Like, I actually like my job, which, I'm not sure many people do, but.
I like my job.
I like I like my job.
All right, any questions from the audience? I see you in the back.
So I heard red tape be mentioned a few times, and as an owner-operator of several mixed-income properties, I think we're seeing that on the operations side as well. So an example is sometimes we have to keep a unit vacant for over 2 months while we're waiting for the Section 8 inspection to come through. Are there any conversations happening to help make these processes more efficient, or have you started collaborating with government? I'm curious to see if there's any tips for me on the West Coast.
Anyone?
Is that the HQS inspection that you're dealing with?
Yes.
Yeah. I don't know your specific example, but I know when we have issues, it's not normally, as you know, it's not the elected officials that you go to. It's really the lifetime bureaucrats that have been at the HUD office that's responsible for your area of California, and building those relationships with the asset managers and understanding exactly, or whoever's administering the HQS, if you can undo that logjam. But yeah, I mean, it's really building out the relationships with people who will either be there for a long time or who have been there for a long time. And you normally do that by being a good steward and saying, hey, this has been vacant for 2 months. Look how great this unit is. Yeah. It's like brand new. It's like, this is looking great. I mean, give them a reason to undo that issue. I'm sorry I don't have the answer for you, but that's normally what we do. Yeah.
There's so many things that are frustrating and don't make sense. I mean, with HQS, I remember looking at a property that needed renovations. There was a lot that needed to happen, but in order to close, you needed to pass the HQS first before the property could transfer. So you had to fix it before it could be repaired, which doesn't make sense at all.
If it makes you feel better, we have HQS problems too.
Yeah.
So you're not alone.
Right. It's a very sexy topic.
Yeah,
HQS.
very cool.
Anyone else? Yes. Here in the front. Yes.
Hi, my name is Alice. I'm from Cornell University. Thank you guys so much for coming to talk to us today. My question is, as a developer, how do you choose between a 4% versus a 9% tax credit? Perhaps, are there additional factors beyond the predictability of 4% not having to compete for the 9? Or is it, for example, Trinity, who would have that longer term perspective? How do you guys evaluate between these options?
For us, I mean, so each state and a lot of cities have their own, they call it the QAP, that outlines how these resources are going to be allocated, what you need to do to be competitive to get a 9% credit or 4% credit. So in some areas, a mixed income project might not qualify for 9% because that's not a priority of whoever wrote the QAP. So I think it really just depends on, looking at your project, figuring out, is it more appropriate for a 4% or a 9%? A bigger project with lots of units, usually you can't do 9%, you have to do a 4%. So really looking at how your project scores competitively and also, works within the parameters of the rules of the program. It's a very simplistic way of thinking about it, but.
Yes, in the front here.
Hi, I'm Shui. I'm also from Cornell University. So my question is, I'm curious about what kind of conversation you have between you and the investors. So how you marketing yourself, to sell your vision, your value, or maybe try to explain how your risk-adjusted returns are attractive?
I actually can't answer that, unfortunately.
I can answer from the LP perspective. So we own real estate both directly and then also we'll do it through funds where we're a limited partner and we talk to funds who are GPs. And so I see a lot of presentations. We have a lot of existing relationships. We're constantly in the market talking to GPs to see if there's an investment to be made there. I think there is a whole range of way people talk to LPs. I think some are more successful than others in terms of explaining what they're trying to achieve. I think to start on, I guess, the less attractive personally to me, there's been so much focus on ESG, which I think is a good thing, but sometimes it can be overutilized, and I see a lot of groups that I might not even consider to be affordable housing, and certainly not in the way that we have just described to be affordable housing, really pushing that as a marketing agenda when they might not necessarily be even targeting the AMI bands that would, we would be considering to be affordable. So I think there are some people who are very good at marketing and might not necessarily be implementing a strategy that is as aligned with us. And then there's the other end where they might be doing exactly on an affordability strategy that we would want to pursue, but they're not as good as communicating about it. And that could just be because they're leaner teams and they don't necessarily have IR groups and they don't have these big marketing budgets and all of it. I would say the most successful, and I would, kind of talk about MSquared because that is a group that we are invested in. It has been a great open dialogue of being transparent about the things that they're looking at, that we'll talk to them about and saying, yeah, we think that's really exciting. I speak to Carolee's colleagues every other week to just talk about their pipeline because of one of the funds in particular that were anchored. So I think it can range in terms of the way people talk to their LPs, assuming that's what the question was. And MSquared does it very successfully. So how do you guys,
Cynthia.
Do you want to add to it?
Yeah, I would say that, all investors are different, right? So, we work with Cynthia, and her team is very interested and, wants to be a thought partner, wants to be involved in the process. There are other more passive investors who, are excited about what we're doing, have invested in us, and are, like the once-a-year update. So I think it's really just calibrating toward what your investors' expectations and desires are and making sure that you're meeting those.
Do we have time for one more? Yes? Okay.
Hi. Okay. Peyton Flory from Cohen and Steers. I'm just curious, in an environment like this with interest rates, construction costs, kind of everything going against developers, are you looking at modular development or what creative solutions are you looking at for kind of aiding in this crisis?
Are we looking at modular development? We've been looking at modular development for a long time. I think that, a lot of people have thought that it could be the silver bullet to our construction cost problem. But I think it's worked in certain cases. In others, it doesn't work. I think it's hard in New York City. It's not impossible, but it's hard in New York City because you need a certain amount of laydown space, a certain amount of staging space for the modules. You also need to get the modules from the factory to the city, which means you need a whole escort, and sometimes roads closed to get those, the units to the city. So I think it depends on where you are. Sometimes those logistics wind up costing, just as much as if you build a conventional building. And then there are also issues around guarantees and, who takes the guarantees on that, how the banks look at it. So I think that there's definitely been a lot of modular projects that have worked, but I think there's a lot of complexity to it too, and it doesn't work everywhere.
All right, well, thank you. Thanks so much. Thanks for our panelists.